couple reasons, Sarah. We still like the market. We think earnings will power the market to new highs and end the year above where we are today. But that's really the key. This is not a market that's being driven by multiple expansion the way it was last year. It's really about where do you see improvement in forward-looking earnings. The two areas we see that the most, technology and non-financial cyclicals. So industrials, materials, consumer discretionary. The financials and the defensive companies were not seeing the same strength. That's why we're lightening up. That's why we're underweight those sectors. And instead, we've been leaning into sort of this barbell approach. On one side, the growth names, and on the other, the higher quality non-financial cyclicals.
Do you have any worries about the market here as the Fed is set to embark on tapering next week? And the market continues to price in higher odds of an earlier rate hike. I saw this morning June odds were now, or June is now 40%.
Look, at the end of the day, I get it. Everyone has a memory of the taper tantrum in 13, but I really do think this is not the biggest threat to the market. This has been very well telegraphed. Regardless of the taper, which will almost certainly start in November, you're going to have very easy financial conditions for a prolonged period of time. To me, the big issues are around the strength of the recovery. Can companies maintain margins with all of the supply constraints we see? And obviously the uncertainty around inflation. Now, if that persists longer than people think, and the Fed has got to go much quicker than people think, then that is a game changer. But I think the tapering is not an existential threat to the market. Stocks can survive a 160, 170 10-year note.
Yeah, well, speaking of inflation, we woke up this morning with that tweet from Jack Dorsey, he's the CEO of Twitter, but maybe more importantly on this conversation, the CEO of Square. Maybe he has some insight because he says he sees hyperinflation. I have no idea what data he was using, Russ, or why he has that view.
He's also a Bitcoin enthusiast.
And he is a Bitcoin enthusiast. Obviously, there is a thought that crypto would certainly benefit from that environment. You are not calling for that, I would assume.
We are not calling for that. To be clear, we have spoken about the fact that inflation is going to be a little bit more persistent than in just a high month or two. And certainly it's going to take us into 2022. And to me, the big issue goes back to a question Sarah asked, what about the supply constraints? Because that's where you really have the risk of inflation being more persistent and more of a problem for the Fed. But again, to me, that means inflation's elevated. I kind of struggle with the word hyper.